welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, how bad will the fallout from a trade war be for Canada? And generational divides in wealth as a huge transfer takes place. Plus, is it time to reconsider cozying up to China? That's all ahead. First, for the week that was in business, it's time for the briefs. A wild week on markets whipsawed investors with massive intraday moves in stocks and some big losses for businesses deemed vulnerable to tariffs. A 90-day reprieve to negotiate for most countries turned stocks around as the week went on. Massive tariffs on China remain in place, which will still affect many U.S. and Canadian importers and Canadians who export Chinese-made products to the U.S. Canada responded to U.S. auto tariffs this week with tariffs of our own, up to 25% on vehicles imported from the U.S., or at least the portion of those vehicles made south of the border. Meanwhile, the U.S. raised tariffs on Canadian lumber even further this week to 34.5%. The province of Ontario announced a tax deferral plan for business that could cost up to $11 billion. We got a closely watched read on U.S. inflation this week. Prices moderated in March, leaving inflation at 2.4%. Although price increases have yet to fully reflect the impact of the Trump tariffs, most economists think that at least a one-time jump in inflation will hit the U.S. in the next few months as a result of higher costs being passed on to consumers. More businesses now expect a recession in Canada this year. That's according to the Bank of Canada. 32% of respondents to its Outlook survey think a downturn is in the cards this year. The survey was from before tariffs were announced, but were seen as a risk. Some 22% of firms also said uncertainty has put their spending plans on hold. Regulators have greenlit construction of Canada's first licensed small modular nuclear reactor. Ontario Power Generation wants to build the reactor to increase power at its Darlington nuclear site. If it's constructed, it will be the first SMR built outside of China or Russia. And those are your business briefs. Because of a certain amount of unknowns, economists like to use scenarios to make forecasts, usually 3 different ones, representing the most likely outcome and then also the best and worst case. These days, the most likely also seems to be the worst. Jean-Francois Perrault is chief economist at Scotiabank. JF, thanks for being with us.
It's a pleasure.
And I mean, honestly, the forecasting business is a tough one these days. But when you look at all of the moving parts, including this last minute 90-day reprieve by the president, just as people were trying to get their heads around pricing in the costs and the risks associated with a global trade war, where does that leave you in terms of trying to figure out where we go?
It's a good question. I mean, we were literally in the process of finalizing a forecast that we're going to publish later this week, before President Trump announced a pullback of some sort. So we're going to have to go back to the drawing table on that. I think what it indicates is, and leaves us a little bit more hopeful, say, today than we were earlier this morning, or right now relative to this morning, is, there is clearly a recognition on his part that the course of action that he's chosen is damaging and that he needs to do a little bit of damage control. And that is very welcome relative to the messages that we've seen over the last several weeks. So from that perspective, you think of it from a forecasting perspective, it does, for the time being, suggest that, those really bad downside risks of the scenario that would get worse and worse and worse because President Trump would double down as he has, maybe you take that off the table a little bit and it gives you a better sense of what might be a landing zone for a forecast and you take some risks off the table. So that's helpful.
Right.
The reality is, sorry, go ahead.
No, I mean, I want to kind of, because wrapping our head around the macro view, which you have to do, and I really do have sympathy. You're trying to make forecasts and everything changes. And then we take it down to the business person who's doing the same thing day by day, trying to figure this out, who this morning was worrying about, finding the manifests for goods that had come in so they could prove how much of their product is Canadian. How should they be thinking? Should they be thinking, actually, they could be optimistic today, that things are not going to be as bad as the worst case scenario we had thought was coming?
I think so. Certainly if you're a Canadian and perhaps European. If you're Chinese, different story. Yeah. And if you're importing from China, maybe a different story. I think this is a clear de-escalation, while at the same time escalating against China. So depending on the nature of your business, depending on where you're sourcing imports, depending where your market is, things got a lot brighter or a lot worse today. For most Canadians, I think they got a lot brighter in the sense that we can be hopeful that this is again, this de-escalation actually takes effect, and maybe we end up in a situation where even the tariffs that are in place now get walked back to some extent, or that we undergo, we kind of launch into early renegotiations of our trade deal with them. Those are all things that are optimistic, but knowing President Trump and knowing the kind of back and forth and decision-making process that he seems to go through, we can't take a significant amount of comfort from the fact that he's moved back a little bit today, and that gives us a little bit of breathing room, but things could come back on tomorrow or next week, as we have seen many, many times over the last several months.
Yeah, so the uncertainty, of course, remains the theme. Only a few seconds here, but we do have a Bank of Canada decision coming up. Has any of this changed your view? Do you think the bank waits and sees, as most people are expecting?
I think this makes it easier for them to do that. A little bit less uncertainty. We're certainly seeing that in equity markets, which are rebounding very, very strongly on the basis of this news that there is a possible de-escalation scenario. So you take away the really nasty scenarios off the table. Hopefully, maybe you still end up with a U.S. recession, but it's less severe because there still is crazy uncertainty, and of course the tariffs from China will hurt. But I think it does clarify things a little bit for the Bank of Canada in the short run. It gives them a bit more room to assess the full impact of everything that's going on without needing to rush into a cut next week.
Jeff, great to have you with us. Appreciate your time.
Thanks very much.
Jean-Francois Perrault is Chief Economist at Scotiabank. Coming up, a closer look at the state of things for Canada's young people and a growing wealth divide. Stay with us. Welcome back. When it comes to financial well-being in Canada, it may not be so much who you know as who you're related to. Here's a look by the numbers. Boomers stand out as particularly well off in Canada. People born between 1946 and 1964 enjoyed a combination of solid economies, strong market growth, and affordable housing. Their average net worth is $1.4 million. Being a child of a homeowner is the best predictor of home ownership. StatsCan says people born in the 1990s and those raised in owned homes are twice as likely to buy one of their own. According to CIBC, about a third of first-time home buyers had help from their family to do it. The average gift was $115,000. And for the children of the well-off, it gets even better. $1 trillion in wealth is being transferred from baby boomers to their millennial and Gen X kids between 2023 and 2026. That's driven the wealth of some millennials up 82% since the pandemic, while Gen X's net worth rose 78%, and baby boomers still saw gains of 20%. It goes without saying that this is not evenly shared, but households where the top earner was under 35 years old had a net worth of $48,400 in 2019. That's a big jump from the $26,000 that similar households had back in 1999. You might think seniors are so wealthy, so government supports for them will be small, and you'd be wrong. Spending on the elderly is still the single biggest component of the federal budget at $81.1 billion this year, most of that through the Old Age Security Program. And while some of those seniors definitely need the support, OAS is only clawed back, starting with net incomes above $90,000 a year. Seniors still qualify with incomes up to $148,000 a year. Those generational inequities aren't just unfair, they're also unaffordable. Paul Kershaw is a professor at UBC and founder of Generation Squeeze. Paul, thanks for being with us.
Good to be with you.
One of the reasons you founded Generation Squeeze was to look at the kind of inequities that are facing young people, that it's really a kind of a legacy that the older generations are leaving them. Do you think young people feel it and they feel like they're being given a bad deal?
Oh, they absolutely feel it. And your run through the numbers also makes me feel like I can just end an interview now and go away. But I think the answer to your question would be a younger demographic is experiencing Canada evolving into a landed aristocracy rather than a meritocracy. And we really need to lament how we've allowed our housing market to disrupt the economy in such a way that hard work doesn't pay off for younger folks as it did decades ago. And now housing security depends on your attachment to an older homeowner.
So let's talk about this massive generational transfer of wealth already happening. Used to happen after death in the form of estate transfer. Now older people are so rich they can do it while they're still alive in some cases. What do you see in terms of the transfer of income inequality? We're literally some groups their children will be wealthy, and other groups, their children simply won't.
I think that we have that intergenerational transfer and the evolution of our housing market, not only creating intergenerational tensions, but within generation tensions. And so the latest wealth data that you were just describing, from 2019 to 2023 is showing that some Gen Zs actually have done somewhat better in the housing market than we might have predicted, because they were supported by an older family member to get into a housing market at the time the market was exploding and creating wealth windfalls through rising prices. But by contrast, if you don't have that access to someone who's been able to help you out, or you're from Atlantic Canada or some of the prairie provinces which haven't seen the same wealth accumulation, then actually this is a pattern for creating within generation class inequality. And so again, I'm actually borrowing a phrase that Mr. Poilievre used to use. I wish he would bring it back. He talked about a landed aristocracy emerging in Canada, this transfer of wealth from the worker to the asset owner of a housing. Mm-hmm. And that's actually not a bad analysis, but we've lost real conversation about the age implications, the generational implications in this election. It's relatively absent from the dialogue.
Which is so interesting. I mean, the spending on old people, which is such a massive part of the budgets, gets so little attention. Paul, is that because old people vote and they have a lot of power when it comes to who's going to win the next election?
Partly because they vote, but it's also partly because platforms sort of hide the fundamentals of the federal budget. And you actually underestimated the old age security spending this year. It's $86 billion this year. In a few years, it'll be $100 billion annually. And old age security over the next 5 years will get in aggregate another $71 billion. By comparison, childcare will get $10 billion. Post-secondary, 5, housing, 6. Can anyone see a very structural ageist pattern in that fiscal foundation for the federal budget? And yet no party is grappling with that ageism against millennials, Gen Z, and the kids that they're raising.
We got to leave it there, Paul. It's so good to have you with us for this.
My pleasure. Have a great day.
Paul Kershaw is a prof at UBC and founder of Generation Squeeze. There's a feeling in Canada with all the turmoil right now, this should also be a time of opportunity. So what is the best way to find and support tomorrow's business leaders? Scott Stewart is founder and CEO of Venture for Canada. Scott, thanks for being with us.
Thanks for having me.
I wanted to check in because, we're talking about young people, and we know that business leaders, older business leaders, are feeling the uncertainty and the risk out there. What do young entrepreneurs do in a time like this typically, and how can we better support them?
This is definitely a time of both significant challenge for young entrepreneurs, but also a lot of opportunity. In terms of challenge, is that the tariffs obviously present a huge challenge for many entrepreneurs, including those who export. The opportunity is that we live in an era where things are changing really fast, and as it relates to artificial intelligence, there are so many different opportunities out there. So how you can support young entrepreneurs is buy their products, look for Canadian items in stores, and think about ways, whether it's mentorship or with your wallet, that you can support an entrepreneur.
And of course, people will be looking, I think, to do that. Are younger entrepreneurs more likely to be able to do things differently? We talk a lot about diversifying our trade relationships, looking for new markets. Is it the new businesses that are likely to do that best?
Definitely. I think, especially in the context of artificial intelligence, people can build large businesses faster than ever before. And I think young entrepreneurs can leverage AI to build companies that have a global presence in record-setting time.
And you said buy from young entrepreneurs. I think if people knew how to do that, they would definitely do it. What other forms of support do you look for? Venture for Canada obviously supports this at a grassroots level. Where do you find your support? Is it existing business people? Is it the government? I mean, what's the best source of helping those future businesses come to be?
The best ways to support future entrepreneurs or young entrepreneurs is through mentorship. So I think in our context of connecting young entrepreneurs with people who've been through the trenches and have experience building companies. I think the second is also connecting young entrepreneurs with investment, whether that's connections to banks for loans or to individuals who can invest in those companies. Those are some of the ways young people can support young entrepreneurs, but also the way Venture for Canada supports young entrepreneurs.
A lot of young people will not have seen a big downturn. They will not have seen a big market correction if they're young enough. Is that a problem for them as they kind of navigate a hard time, or do you think they're prepared for it?
I think people are more prepared for it today than before COVID. I think most young people today have lived through the global pandemic, and they've seen the stock market fall, 30%, and live through, March 2020. So I think because of COVID, young people are more prepared. That being said, it's still very challenging times for many.
And what do you think is the best way for them to manage that? What advice do you give to young people who are kind of a little bit at loose ends trying to figure out how to overcome that fear and uncertainty?
One piece of advice I have for young people is to have self-compassion for yourself and to say that right now it is a challenging time in the world. There is a ton of uncertainty out there, but to recognize that it's a challenging time for many other people too. And it's to speak to yourself like you would speak to a friend. So I think self-compassion is one key piece of advice that I really recommend young people foster.
Probably good for everyone. Scott, thanks for being with us.
Thank you very much.
Scott Stirrett is founder and CEO of Venture for Canada. Coming up is the enemy of our former friend. Still an enemy? The China question is still ahead. But first, just when you thought Canadians had enough debt, it's getting even easier to borrow. In Ontario, you'll soon be able to do it at a gas bar. Circle K plans to offer loans on site at some of its stores, ranging from $750 to $3,000, and with interest rates starting at 9.99%. Maybe it will keep some away from predatory payday lenders. It may also be an outlet for those who can't access regular banking. One thing's for sure, borrowing just got more convenient. We're back after this. News that China may be interfering in Canada's federal election was met with unsurprise. It's a timely reminder, though, with many now wondering if trade with China doesn't represent a sort of plan B from the United States. Margaret McQuaig-Johnston is a director at the China Strategic Risk Institute. Margaret, great to see you.
Good to be with you again.
I wanted to talk to you because there has been this sort of general looseness of our approach to China most recently. It feels like there's a bit of a détente happening, maybe because the U.S. is behaving so badly, it makes China look better. Is now the time for Canada to be warming up to China?
Well, I don't think this is the moment. And the reason I say that is it's only a couple of months since they executed 4 of our citizens and slapped major 100% tariffs on our canola oil and peas and 25% on our pork and seafood. And so I don't think we want to reward them at this time. Having said that, there is a possibility of our being able to take advantage of the noise on the U.S. trade front with some of our products, but we have to be careful about that because there is some amount of substitution of Canadian for American products, but the U.S. will be watching this very carefully. And so we don't want to jeopardize our very important trading relationship with the U.S. By trying to take, short-term advantage of products on the Chinese market.
For sure, that would be wise, right? We hope to get negotiations going on our North American deal. When it comes to China, for a long time, we've had mixed feelings about it because it is this massive growing market, a growing middle class. It represents a way to diversify. And yet, in most recent years, Margaret, we've had many reminders of why China is a hostile actor. Not a friend, definitely a foe. It spies on us. It detains our citizens. It executes our citizens. There's a whole host of reasons why we shouldn't do business there. And it steals our intellectual property. Can we take all of that and in a new world where our best friends are behaving so badly, see that differently? Or should we still see it very clearly and keep China at arm's length?
Well, we will always have trade with China, particularly in our resources and to some extent agriculture, although there we're exposed to the extent that we can't find markets elsewhere. But, the electronics on the world market today doesn't tend to come from Canada. It tends to come from China or the U.S. And so we're limited in terms of where we can trade with China.
Yep.
We have been offered a free trade deal. The U.S. Chinese Ambassador Wang Di recently proposed that we start to negotiate a free trade agreement, but he had conditions. We have to take off our 100% tariff on Chinese EVs and allow their big company BYD and other companies into Canada. They need full access to our resource sector and investments in resources. They want access to the Arctic. And they want us to be silent on our criticism of China on the Uyghurs, Tibetans, and Taiwan. And so they want access to our energy. So it's a mixed bag, but a lot of these conditions, I don't think any Canadian government of any political stripe is going to be looking to meet those conditions.
Yeah, only a few seconds here, Margaret, but I hear that list and I think, no way are we going to agree to that. Would you say that there are dim chances of free trade with China?
I think they're black chances. I don't see chances. But, we will have continuing trade in some sectors.
Yeah. Margaret McCuaig-Johnson, great to have you with us. Appreciate it. Margaret McCuaig-Johnson is a director at the China Strategic Risks Institute. Time for the takeaway and turning lemons into a lemonade stand. Like the rest of the world, Canada is feeling the brunt of a trade attack from the United States. It's an attack that's economically painful and one that is already threatening jobs and security in this country. But as with most challenges, it brings an opportunity that Canada would do well to exploit. Top of the list is opening our doors as wide as possible to those who can't or won't stay in the United States now, and those who might have taken their talents there but will hesitate to do so now. Among those people, we can find the world's leading scientists, top academics, boldest entrepreneurs, and most striking cultural talents. Some of them will avoid the U.S. by necessity, as massive funding cuts erode a long-standing base of support for research and learning in that country. What if Canada made it a goal to be the destination for those who've been disenfranchised? We already have investments in science and learning, in innovation, and in the commercialization of ideas. But Trump's decision to crater support for those things creates a void, one that Canada could use to its advantage by making a bold and even visionary commitment to them. This week, Ontario's University Health Network kicked off a campaign to recruit 100 early career scientists to this country. It'll spend $15 million on the first 50 people and hopes to find matching funds for the next 50. Let them come here should be our slogan. They being hardworking, intelligent people in all walks of life from all around the world. Let's make Canada a hospitable place for knowledge, for truth, for science, and for differences of outlook. This isn't about importing an ivory tower of elites. It's about leaning into the kind of country we've been working on for generations. One that knows that diversity of thought is where the real power lies. And a society that embraces difference of opinion without hatred or fear isn't just a better one, it's a stronger one too. My takeaway, Canada looks pretty good by comparison right now. Let's not squander the opportunity to actually be good and reap the very real rewards of that. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.